Hey, welcome everyone. Welcome to the Hurley Investments Market View commentary for the 20th of November. We're almost done for the year here. There will be no trade findings and adjustments this week. It'll be Turkey Day. So enjoy that turkey. With that said, let's spend a little bit of time going over what's already happened this week into last week since we last spoke, and what the end of the month expectations are for November in the stock market. If some of you have been paying attention, what was the main company that ran our futures this morning, and why our futures were down when we were looking to have an up market? Well, I guess that's not fair. What big tech company had some issues today? Let's just put it that way. That kind of turned out to be a non-issue, but will be an issue very quickly. Anyone know? There you go. Microsoft. So here's the short answer with Microsoft. For lack of a better term, they've bought OpenAI, which was a shoo-in to go public. It's the chat bot. It's artificial intelligence. The short answer is when Microsoft couldn't develop it on their own, they bought it. They bought this company for umpteen billions of dollars, right? So today, the board, and to be honest with you, I don't know if it was the board of OpenAI. In fact, I should probably find out. I took notes. But the board, and I'm just going to define it as the board. Don't know again if that's the board on OpenAI or Microsoft. The board fired CEO and, kind of one of the original founders, Sam Altman. Canned him. Fired him, and from what it says, he was not consistently candid with his communications with the board, hindering its ability to exercise its responsibilities. So in plain English, the CEO said, I'm giving you the bare minimum because you guys are a pain in my butt. That's the real issue, right? You guys are a pain in my butt. So it dropped our futures down today. It actually affected them overnight. We were negative futures overnight. And then, of course, Natal, I don't know the exact CEOs, but Nadella offers him a new position in a newly created AI team. Never been mentioned at Microsoft, and here he is trying, to keep him on. But the reality is, again, he's going to tell him to piss off. In fact, he even went over to a competitor. So there's huge uncertainty. So when that uncertainty happens, what do you think happens to Microsoft? This tells you how screwed up our market is. All this uncertainty. So Microsoft is up 2.05% or $7.59. And it's a cluster. No one's heard of this newly created artificial intelligence team. Nadella is basically saying, hey, we need to keep that, I don't want to call it intelligence, but we need to keep that We need to keep that company together. That's the best way to say it. Best way to say it is there are talent. Well, it's not even talent though, because he was a leader and about 600 employees out of the 770 at OpenAI were like, I'm out of here. If he goes, I go. So talk about a mutiny. This is a mutiny that is absolutely ridiculous. It just doesn't make a lick of sense. Yet, welcome to our low volume, it doesn't matter what's happening kind of week. Retail traders rule this week, as well as the news is okay. Any other company, especially this week, Microsoft is down 20 bucks. Easy. Should be down 5% or more. Nothing's settled yet. As I'm reading everything out there, Altman basically told Microsoft to piss off. He's going to a competitor. Well, no, we'll offer you some position. You know, he just wants to run it the way he wanted to run it before they started to go public, before they got bought out by Microsoft. So when you hear companies talk about, oh, we're going to go public, we're going to do this, we're going to do that, all it does is increase the bureaucracy within a company. It makes it harder to do what the founders wanted to do. There's more levels of compliance. It's a major pain in the butt. Which brings me, because I think you're here now, which brings me to an email that I definitely want to go over. And there were a couple questions in it, but the first question was, Kevin, why are you so specific, or he's going to say anal, about what you have to do if someone decides to get registered to trade other people's money? And so here is your simple answer. And there are a couple ways I look at it. If you don't spend 40 hours a week or more working, and I'm going to put working in quotes there, right? You are doomed to fail. You can't trade money as a hobby for other people. If you get registered, penalties are 10-year minimum sentences for each infraction. Thank you, Patriot Act, right? And the last thing, yes, you can get lucky, but everyone's luck runs out. And then what do you do? Too many people in this industry capture their money and then they're gone. It's shocking. As I go into my quarterlies with the state and I talk to individuals that are doing what I do, I hear some people in an up week that will say, hey, I didn't work at all this week. I'm like, but you're managing people's money. Oh, I've got them in funds. I've got them in Apple. I've got them in an ETF, Apple, and, you know, something else. And they just let it ride. And I questioned him. I said, well, don't people call you? And they're like, oh, yeah, all the time. So I'm like, well, what do you say if you took the week off? Why aren't you paying attention to what's going on? Why don't you wake up, you know, at 6 out here Mountain Standard Time to spend an hour and a half going over the futures? why don't you have alerts set up on your phone? And his answer was shocking. It's like, because I don't have to. Well, do you call those people back? He's like, no. Really? You don't have conversations with your clientele? He's like, no. How do you do? Well, not well, but no different than anyone else. And it's shocking because I know how well he's done, because we've picked up an individual that in the last 2 years has lost 50%. And I sit there and I just scratch my head wondering, how dumb are some of these people that are with this firm? And number two, and I'm going to tell you plain and simple for the person that's asked this question, if you're not treating it like a real job, you're doing yourself and your clientele a disservice. I'm not saying you always have to get it right. You don't. That's why we call our trade. But if you're going to play with other people's money, if you don't care about putting the time into it, I'm going to go so far as to say, if you don't treat it like an athlete, like maybe a doctor would by way of educating yourself, you shouldn't even be considering getting registered to manage people's money. Because you took an education does not mean you're qualified to be in the market. Because you've taken education and you've done good on paper does not mean you should be trading other people's money. And there's a huge difference between education and real world application. So I'm just going to tell you that if I seem negative, it's not that I'm trying to limit my competition. What I'm trying to do is help you understand the risks that are involved in trying to set up your own firm and manage people's money. It's a huge commitment. And really, if you're not spending 50 hours a week doing it, you will get stung and bit, and it won't be a happy ending with what's out there. So the second question that came my way, are you a technical trader? And I kind of giggled at this one because my answer is yes, but I'm also a fundamental. We already did technical, sentimental, and historical trader. No, I don't make all of my decisions just based on technical analysis. I use fundamental analysis. I work the numbers. I make sure I understand as I go through Schedule K's, earnings reports. Part of that 40, 50 hours a week at earnings, if you don't understand accounting, and if you're not looking at their numbers they're turning in, which sometimes can be hundreds of pages, you're an idiot. And I'm going to say that with all due respect. If you think you can get all the information you need from CNBC or Google Finance or Yahoo Finance or your brokers, little snippets of information, you're killing me. You have no clue what you're doing. You have no clue if you should be in a stock or out of it. You have no clue if they're going to go under or not. People they don't have to use you. They can be in the SPX index, follow the S&P 500, and probably do a better job than you will. But yes, I use technicals for entry and exit points on shorter term trades or ideas. I use fundamental analysis to make sure I understand what's going on in the market. I look at the sentimental indicators to make sure I understand where markets are turning. And we also use historical. We go back in time and look at historical trends. We try to see if they match. We try to see what's there, what's not there. with those type of ideas, you can either sit on a pogo stick and base yourself on just one type of trading, or you can be a technical, fundamental, sentimental, historical. You could even put in here options protection investor. So there's a lot that we're doing to make sure that we are doing the best we can to protect people's money and what we're doing. So no problem there whatsoever. Let's just plan on making sure that you do the best you can to understand what's going on. I hope you understand. One more thing I just want to put in here. You will not be right more than you are wrong. So there's the first part to understand. There's no way you're going to be right more than you're wrong. So what's your methodology? What's your protection for understanding that as much as you think you're right, and that's what I giggle at when you hear these things, 80% profitable trades, you know, bull crap. That's not true. It's 50-50. Sometimes you can make it an 80% if you can adjust your trades. That's why I giggle at you know, stock pickers and cryptocurrency pickers. You're not right more than you're wrong. So what in your methodology are you going to do to protect yourself and your clientele? Here's some of the fun things about being registered. You get to pay large sums of money to be registered. You get to have the SEC dig into your past history, to dig into your finances. At any time, they can freeze any account with your or your wife's name on it. I should say you or your spouse, because there are some women money managers that are out there, right? Or your significant other in today's screwed up world, right? A mistake, even if it's something that is legit, you just missed it. There's some mistakes that hold you a mandatory 10-year penalty in jail. And you cannot use ignorance as a defense for a mistake. So you just, I'm sorry if I sound negative, you just have to understand the risks that you're going into. All right, going back to this week, Thursday, crying out loud, Thursday, market closed for Thanksgiving. Friday, half day. And in all honesty, there is how do I say this? There is no volume coming. Well, our volume was today. You'll see less volume tomorrow, almost no volume on Wednesday, no volume on Friday. You might see a couple big swings, but anything that happens that's not a major news event will be corrected the following Monday. So there's some things to keep into mind. A couple of questions came in. Yes, certain accounts are protected from the brokerage house and from a bank through SIPC or FDIC insurance to $250,000. They're not protected from a money manager making poor choices or trades and losing your money. Is there insurance from RIAs? Yes, we have to have a surety bond that will protect individuals' accounts as a minimum up to $1 million. As you get bigger, it's got to go to $5 million or $10 million. especially if you're going to be in doing management of businesses or companies, small companies, 401ks or investment plans. But again, that insurance is to protect the customer. Kevin, don't they have errors and omissions insurance? Yes, they do. But errors and omissions insurance is for filling out paperwork. It's more used on insurance, and errors and omissions will not protect you from FINRA, the SEC, or a Patriot Act mistake. Those are all criminal offenses, and your errors and omissions insurance does not cover you for that and will not keep you out of jail. So I think I've answered those two questions. Make sure that we're all on the same page there. So the short answer is we're going to do a lot of watching, and any end of the week positions that we're willing to get rid of or protections we want to put on now for next week, we'll make those decisions tomorrow. What am I talking about? We're bullish, and today we just hit overbought on the Dow Jones, 70.72. So we're 0.72 overbought. We could go, and our expectation is we're going to look a little bit like this. And our expectation is we've had our Christmas rally through November. As soon as we got overbought last time just a bit, this was our run down. And we would expect that same run to occur the middle of December, which doesn't have to be the interest rate hike meeting, which I believe comes on the 13th, but it just has to be with them not saying anything. And with them not saying anything, as you can see through the August, September meetings, we've had these runs lower. There's no reason our market should be up as high as it is. Our expectation is our Christmas rally has happened. If you weren't participating, you probably have missed it. And we're looking for things to come back down, at least to test or touch the 50-day simple moving average, which is right on the 200-day right now. They are really close. The 50-day is 12 points higher than the 200-day. S&P 500, 71.56. We are also bullish, and we're overbought. We're not going to get better. We might run a little bit into the week, but just taking a look again, I'm going to highlight it. Last time we were overbought, there's the 3%. Last time we touched, there's a 3%. When we stayed for a week or more, there's an 8% roughly. We're using past history to justify some kind of future expectation. NASDAQ, guess what? It's the most overbought. Kevin, what do you see? Again, I'm repeating myself. Overbought, slight pullback. Overbought where we expect kind of this week will keep going. Down it went, 500 points. Overbought here. We expected, well, we didn't expect this, but it was choppy. Look at how far down it went. Yes, it only finished off right here. The initial drop, again, that's about 8%. It would make sense for us to have another 8% drop in the market, especially if we ran through this week. So we're looking for protection. Kevin, don't you know the S&P is up more than 2.5% for November? Yes, I do. But I still think it's going to finish at 2.5% as we have a pullback, because there's no justification that we've been up this high, and we also have a pretty good thought pattern on where things are going to go. So yes, we could be up closer to 5. We'll probably finish up between 2.5, maybe 3. I almost put 3% in there. I just don't have that much confidence in the market, especially if you look at this run, 41 up to 45, basically 10%, right? We're there. We're not at the highs, nor do I think we'll get there, but we're there. We're overbought. Our run has happened. Our Christmas rally has happened. Watch the Fed now raise rates on the 13th of December and watch the market really give up that whole 10% the last half of December. Earnings, second week of retail. Allergen and Zoom today, Abercrombie and Fitch, Best Buy, Burlington, Dick's, Kohl's, Lowe's, Guess, Hewlett Packard, Urban Outfitters, Jack in the Box, Nordstrom's, Baidu, and Nvidia on Tuesday. Wednesday, Deere. Thursday, markets closed. Friday, half day. With that said, our economic reports shift as well. Leading indicators today were not good. They were worse than expected. Negative 0.8 versus a 0.7 that was supposed to be negative 0.7. So I missed it by another negative 0.1%. Existing home sales on Tuesday. MBA and initial and continuing claims, it's usually on Thursday, are pushed into Wednesday. Durable goods on Wednesday as well with the Michigan sentiment. So pretty easy week. If you take a look at durable goods, though, what a huge switch. Durable goods are expected to be down a negative 3.1. Durable X transportation or automobiles is supposed to be up a 0.2. There's a huge spread between durable goods and durable goods minus transportation. So it'll be interesting to see what those real numbers come in as. All righty, here we go. Interesting article on U.S.-China relationships are now more about crisis prevention or crisis containment. Everyone's talking nice to each other right now. Very interesting article, which bodes well for Baidu and Nvidia. Baidu reports tomorrow before the market opens. Nvidia reports tomorrow after the market closes. Gas prices are falling. Could hit the cheapest Thanksgiving Day price since 2020. I agree. I'm not saying I understand it. Someone came on today, and I don't know who I was listening to. I want to say it was probably Bloomberg, but that they said prices could have hit the bottom. Today would be the lowest price for gas for the year, and it bottomed out, which is interesting because I think then someone told me that Kramer said that as well. So I think Kramer listens to Bloomberg, which who knows who they listen to, but I would think we'd still see prices continuing to go down. If the U.S. was smart, we would be refilling our reserves like crazy right now. But I'm not giving any credit to the administration or either party right now because neither party seems to be making that happen. Just an interesting article on exchange-traded funds have come a long way, advisor says, how to use them in your portfolio. Obviously, they should be replacing any or all mutual funds that you're in. If you're in a mutual fund or a bond fund, you are paying through the nose, and I can go over any one with you that you would like to see. And then I found this one, which I thought was funny too. Unusual environment, ETF experts see a rare circumstance for growth versus value trade. It's just an interesting article that one more time is saying the experts don't know what's going on. The algorithms can't predict the future. The artificial intelligence gathers information really good, but it sucks at predicting the future. The future is unknown. And once again, we have an anomaly where things that are happening are not supposed to be happening that way, because you can make money on both value investing stocks and growth stocks, which I kind of chuckle, because why do you have to say that you can't, right? Why does it have to be one or the other? Why can't it just be on a good company that's cheaply valued on its future growth? Why can't you have both growing up? With that said, what questions do you have? I missed two. On why the NASDAQ is going up, how would you know if fixed income money is flowing to the stock market? So the short answer is there are a couple different ways you can view that. Sometimes it's on the CBOE, but fixed income is beat to hell. And fixed income for treasury bonds, like Bank of America, if you go through their last Schedule K in their earnings report, on paper, they're down $135 billion on U.S. Treasury bills, notes, and bonds. What they signed up for that offers a 0.5% coupon rate of return, you can get 10 times that today. Well, Kevin, they're going to get their $1,000 back. And yes, they will in 5, 7, 10, 15, 20, or 30 years. But on paper, no one wants to buy a 0.5% treasury note, except maybe Warren Buffett, for 10 cents on the dollar even. That's what they're trading for right now. They've lost 90% of their value. Well, Kevin, that doesn't make sense. Sure it does. On a 30-year bond, to make 10 years the interest every year on one now versus one that was sold a year and a half ago, duh, it's a no-brainer. Is money traveling from fixed income into the stock market? Not really. Most fixed income bond funds have it reset, not for the client's benefit, but they treat a bond just like a stock, and they try to reinvest it in the bond. On stock ownership, that makes sense. On bonds, it doesn't. It doesn't make sense on mutual funds. It's this reinvestment strategy. If you worked out the years on how long it takes, if you get a 4%, or let's do the average, let's do the 2.5, right? On a 2.5 interest rate, it takes 40 years to increase that stock purchase by 10%. You know what works better than reinvesting bonds? Buying puts and taking your profit from puts to add more shares. So anyway, I hope that answers your question, Abraham. Hopefully it does. If not, send it to me again. The other question, yes, at $100 million, you get set up under a federal Securities and Exchange Commission. So if you have less than $100 million under management, you're on a state level. And there's some omnibus rules, and there's some other things where you have exemptions. But for lack of a better term, I can invest money for anyone in any of the 50 states and the 2 provinces, which is like Guam and Puerto Rico. I'm registered in 13 right now, and if I need to get registered in other ones, I can. The hardest thing is to run international money, and that's where we should be doing a better job of taking care. Well, that's where it's just a trick. It's just managing money, someone's money that's out of the United States has its complications just getting registered, and the money laundering rules are intense right now. All right, any other questions? This is a week for you guys to take a breather. All right, getting back to it. So I'm just going to answer that one more time. My opinion only. I'm going to say it this way. You don't have to believe me, nor do I care if you do. Go for it, run it. But I think, in all honesty, some of the best people that are money managers are athletes, because they know how to divide their time and get everything done. And I'm going to say particularly scholarship athletes. I will say scholarship students, same reasons. They know how to manage their time. And I'm going to throw this out here. A caregiver. If you're a full-time caregiver, it changes your world, because your wants and needs are no longer important. I have had to find a way to spend 16 more hours a week in my schedule, which means less trips and those kind of things for me. I've got to find 16 hours a week to spend time with my son now. My wife is a full-time caregiver for my boy. He can't take care of things for himself. He tries hard, but the risk is him burning down the house or seriously injuring himself. When he doesn't remember things, he's always got to be chaperoned in some way, shape, or form. I feel that mentality works exactly like managing people's money. Their accounts have to be chaperoned. You should be checking to see every day if you're up or down by more than 0.5%. You should be looking daily at people's accounts. How much cash do they have? Are there opportunities? Where do you see them? Sometimes you miss those opportunities. But you should have a plan in place. Disney breaks 100, we're throwing more shares in for Disney. Baidu has a great earnings, we're going to throw more shares into Baidu. Under Armour can get above $9, more money goes into Under Armour. We are cash heavy right now, and we have had a significant run in the market. We have positions that have met or beat that run in the market. We have money to add more, but we're not just going to throw it in. I believe, and it's just my mentality, if you don't treat other people's money, other people's accounts, your own account, if you don't treat it with that caregiver mentality, able to manage your time like athletes, scholarship students, I would go so far as to say CEO, CFO type of obsessive mentality, you're in trouble. And I'm just going to make it that simple for you. Bill, am I allowed to say that, or do you want me just to keep it quiet? Perfect. I'm just going to say I've got someone that's been through it once or twice and have seen people try it. And all I'm going to say is that the risk is there. The risk is there. And I'm sorry if I have made it seem too easy. That's not what I've intended to. But there's someone else in our group that's basically saying there are a lot of other jobs and the risk just isn't worth it. Plus, there are too many swear words in the other one. Any other questions you guys have? And I mean, the fact of the matter is, I'm trying to do this for you guys because in 2008, people wanted to know what's going on, and people wanted to be able to talk to their advisors, and people want to know that their advisors were working. I do webinars so that you guys can ask any question you want to. And so you have an opportunity to know each week I'm putting my amount of work in for you guys and for my own money too. I mean, let's face it, I do this for myself too. I want you guys to know that you have someone that's working his butt off, doing what he should, knowing what's going on, running the numbers, not just out golfing, fishing, and farting around. So hopefully this is helpful for you guys so that you each week can know what your money's doing and why. So the short answer is, how am I looking to trade? We're getting ready to get protection back on for an overbought condition in the market and what will most likely be a 10% drop down, especially when we're running into, is the Fed going to hike now? Are they done hiking? Blah, 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 blah. And for those of you that just made a couple thankful comments in there or thanking me, greatly appreciated. It obviously, it means the world to me to be able to know that I've got, that my clientele has become my friends. That usually never happens. I don't, most people aren't shooting their breeze and fishing and visiting and what have you. The best way to reinforce learning something is explaining it. Agreed 100%. You guys have a wonderful Thanksgiving. Enjoy yourselves. Spend time with your families. Enjoy time. It's interesting. I ran into an article. I didn't put it in here, but the biggest concern when people come close to the end of their life is that what they've done with their time. And take the time to enjoy yourself. Take the time to be thankful for your family. Take the time to sit back and just enjoy some of those simple things in life. So appreciate it, guys. Love you guys. Glad that you're here tonight. Look forward to seeing you next Monday. Thank you, Bill, and I will talk to you next week. Bye-bye, everyone.